Chris, welcome back to Inside the Vault. It's a pleasure being with you here today. We look forward to seeing your charts and hearing your technical analysis. How are things?
Things are great, Mark. Yeah, thanks for having me on the show. And yeah, I think we got some interesting charts to kind of walk through with you today.
Looking forward to it. Back in August, when we last spoke, gold had just hit its all-time high priced in US dollars. Silver was surging 3 to 4 points a day. It was a really exciting time for precious metal investors. Since then, we've seen a little bit of a pullback in the prices. Can you tell us, before we jump into the charts, Chris, what have we experienced over the last 2 months and set us up for where we are today?
Sure. Well, yeah, the last couple of months, we've really just seen the market taking a breather overall. I mean, we saw that huge breakout in silver really started to extend and expand to the upside, and everyone was excited about precious metals. And of course, I think everybody got a little overexcited, and the market got overextended to the upside. And what we're seeing now is just a pause and a pullback. Simply profit taking and other asset classes are kind of more in favor right now. We're seeing people move into more or less the tech still. The solar clean energy is actually the leader of the year, up over 240% alone in the ETF just from solar stocks from the March lows. So the market's always looking for the best opportunity. And we're in the market condition right now where the stock market is sector driven. Right now, certain sectors are doing a lot of the heavy lifting. A lot of other sectors are underperforming or trading sideways and lower, like the precious metals sector right now. But everything rotates in and out of favor. So I think we got some exciting price action to come with precious metals going forward, because they've been out of favor for the last couple of months, but they're forming a really strong pattern, which I'll show you, that points to some pretty exciting pricing just around the corner.
Yeah, I remember when we last spoke back in August, you said that you actually expected there to be a little bit of a pullback after the surge that we saw, which was really a strong move for precious metals. And then there would be a base that would be formed, kind of a consolidation, and that was healthy and that you expected it to happen. And from there, we might see further upside. So why don't we jump over to the charts? We can start with gold. The yellow metal is always top of mind for everybody. So let's start there and see what the charts tell us.
Sure. Okay. So here is the daily chart of gold, and I'll just make it a little more full screen here. And more or less, we saw this really extended run. We've got the COVID sell-off down here where it was forced kind of liquidation. But once that news-based blip, that event blip kind of recovered, we saw price consolidate for several months, and then we saw it take off. And we talked, and this is when we saw metals really taking off to the upside, and things got overdone to the upside, and they were in favor. They were a leading sector back then, and now they've been out of favor for several months, August, September, most of October, and it still looks like it's going to be out of favor for a little bit. Now, if we look at the big picture here, we've had a strong run. We've got price consolidating. If I was to just draw on this chart real quick, we have a series of bull flags. So price rallied up, it consolidated, and then it rallied up again. It's consolidating. These are very bullish stair steps to a higher price. And we're in a bull market. So when a breakout happens, something like this, that's when you really got to get excited. And we're not there yet. We're very close to seeing price breakout, but we're stuck under more or less this resistance, these low levels here, which is also the 50-day moving average, is blue line. And when you're stuck under that, both of those levels, along with the falling trend line, it's going to act as resistance. And today we're starting to see it move down. And I do have a downside target. We talked, I think maybe you and I talked about it, but back here when we had this market correction, this is where the downside target is using Fibonacci extensions. So based on the momentum of the market drop, this initial sharp drop, and its knee-jerk reaction bounce, using those 2 points, you can predict where the next downside targets are. So the 618 is the first target, which it came down and hit. Generally, if it hits the 618 and then consolidates, almost always we come back down to this 100% measured move. One means 100% of this momentum move. So we're starting to roll over here this week. We're stuck under resistance, the 50-day. And we've got this 1810, potentially 1824, a window in here that would still be very bullish. If gold pulls down to that level, that is actually going to be a very strong bullish sign. Not only is it a measured move, within a bull market, but it's also a key breakout level on the chart from over here in July. And the 200-day moving average is going to be working its way up there to act as somewhat of a support level as well. So we've got a really interesting scenario that when it breaks this upper white trend line, it's more or less going to be a buy signal. If it gets down to this 1810 area, 18.7, and then puts in a reversal pattern, or potentially we wait for it to break all the way back up above this trend line up here, that'll be a buy signal. But keep in mind, gold is in a major uptrend. You follow the 200-day moving average. In technical analysis and statistics, a trend is more likely to continue than it is to reverse. So you want to stick with the underlying trend, which is up. We don't want to bet against gold while it's coming down, but once it gets down into these zones, we want to be looking to buy on these dips. And the thing with any new trend is the first major pullback or pause in a bull market is one of the strongest opportunities. Now, we saw gold break out of a bull market back over here last summer. It rallied all the way up and had its first multi-month correction. And this is when we were really excited about it. We're like, okay, this is a beautiful bull flag based on this move, which I could draw it on here. If we do a Fibonacci extension, you can see how these measured moves stack up. Go from the low to the high. This is going to forecast where the next high should be. And of course, it came all the way up to this level. And then of course, we had this March low rally, and it rallied up, and then it consolidated with another one. We can grab another Fibonacci. We go from the low to the high and down to these lows and carry it forward. And we could see that more or less the gold rallied up. This is when you and I were talking. It was in this rally mode. And I said, you know, we're getting to this point where it's going to take a breather. And so now we're forming this new bull flag. Let's draw one more in here. We'll go from the low to this high and down to, so far, this is the low. Now, I think we still could come down to this 18.7, 18.10. So we'll take that as a conservative target. And if we squish this chart down, gold has the potential to run from anywhere in this zone all the way up to 22.20 more or less. So it's a pretty decent move from where we are. And that, I think, could bring us into year end. This market is primed and ready for a new leader, defensive play. Stimulus is pointing to great lower prices in the dollar. Means gold is going to carry more value. So there's a lot of analysis I just covered here, but keep in mind, all this carries over into the other precious metal areas, which we'll touch on quickly. I won't go into as much detail. This is kind of the meat and potatoes, but gold miners, silver, platinum, they all have a similar pattern because they move together. And this is the basic theory telling us where price should go. And it gives us a rough estimate of time. More or less, we're looking potentially over the next 3+ months for gold to get up there.
Chris, that's excellent analysis. Really appreciate it. One thing that really struck me there, that I think a lot of people that base their investment decisions more on just market sentiment and less the technical side of things, is that you said that a pullback is actually a strong bullish signal, which I think a lot of people that are just working on sentiment and price watching, you know, they don't want to jump on the falling knife, and they're, whenever they see that price, for example, if it pulled back to 1810, I know a lot of people that wouldn't be buying. They'd be like, well, I'm not going to invest in gold now because it's going in the wrong direction. But it's really interesting how you said that that's actually a really bullish sign for precious metals.
Right. Well, everything always plays out. So a lot of people trade off sentiment, their gut, their feeling, their, you know, how do they feel bullish or bearish? And when these markets wash out to these low levels, that's actually triggering levels where the average trader is scared to buy and they're selling their positions. And that's how we usually get down there. It's interesting, and investors don't want to buy on those pullbacks or in those windows because they're scared, right? But that is what makes a bottom. It means everyone's panicked out. They get out at those lows, and then of course it reverses right after they exit and takes off. It's just the way the markets work. The majority of investors are those sentiment traders taking the wrong side or doing the wrong thing at the, you know, the wrong time. So, yeah.
Great. And yeah, it's really nice to see a potential upside of about another 10%, 12% from where we are right now in a matter of 3 to 4 months. So I was going to ask you where you thought the near-term target was. Thank you for pointing that out.
Yeah.
Can we jump over to silver? I know you said it's going to look fairly similar, but
Sure. Silver is a little bit of a different beast, but overall it's still roughly the same. If it will load here. Come on, e-signal.
yes, silver tends to be more volatile. I don't know if, I guess the charts obviously would pick that up as well.
Just going to flip to another chart here, see if it'll pull up. Not sure why it's not coming up. Here we go.
There we go.
That is silver. Okay, here we go. So silver had, silver broke into a bull market this year, which is right down around this line. This was a line in the sand that we had that it really needed to hold up and break out. And once it broke that, we started to take off. This upper line is a more significant line from back here. This was in 2016 when we saw gold miners and metals have that first run. And this run was so big. We saw a lot of gold miners and the indexes for the gold miners up like 60, 80%. And it's usually what happens early in a recovery stage for precious metals. We'll have this massive wave of people piling into precious metals in general, and then it'll fizzle out, and it can take years just like it did. But that was kind of like, okay, the bottom more or less has been put in. Now, we had a COVID spike to the downside, news-based. I would somewhat negate this lower low, but these two lines in the sand were the critical ones that when one's broken and it holds, we're going to see a lot of people chase price up. And when this last line in the sand is broken, that's where any of the big institutions that are net short they have to cover. They'd be complete morons if they didn't. And that's what happened. JP Morgan got caught on the wrong side with massive deliveries for their shorts. And that's when you and I were talking, things were breaking out. It was on fire. And of course, we more or less got a big move to the upside. It's consolidated out of favor. It kind of broke down. And we still have a bearish pattern in silver. Now, silver is a little bit more bearish based on this drop and this kind of bounce back up here. We were looking somewhere around 1980 is the extreme low for silver if it was to sell off from here and roll over. So obviously, like you just said, silver is a lot more volatile. So it can drop percentage-wise a lot more. But again, it always makes it up and then a lot more later down the road. So if you're holding silver, I mean, there's a potential landslide here still ahead of us. And I'd be waiting for some type of bottoming formation to form. Could still come down here, and you may not get into it for potentially several months. The key is you don't want to catch this falling knife, like you said, until it hits one of these sweet spots where we know it's a long-term bullish pullback, or it starts to break out above falling trend lines and above the 50-day, and other things are confirming it. So right now, precious metals, it's kind of in no man's land in terms of trading, swing trading, and same with metals investing. You can, hold off to see if you can get it cheaper. But if it starts to break up and close above these levels, then it might actually be the time to jump in and add some more, because we could see a pretty big leg to the upside.
Can you give us an idea, Chris, as you did with gold, what the upside for silver might look like? Sure.
Okay. So let me grab Fibonacci extension here. And I typically try and go from the most conservative level. This is where we saw really the big runs. You can grab different lows, but I find if you go with the most conservative one, and that's where you've got your first target, that's the best place to go. So we're going to go with a more conservative play here and go from that low to this high. And then right now, this is the low. So we could carry that forward and point there. But if silver sells off all the way down to this measured move, we'd be looking at a low somewhere over here. So, I can draw one right here, and then I can actually draw another one down at this lower target. If it hits that level, that'll actually give us kind of a zone of where silver could go. So if we're looking forward here, we're looking for silver more or less to potentially correct down to here, eventually break up into this area, consolidate for a bit, and then break up into this area. So we're looking somewhere around 32, 34 area for silver. But there could be a lot of intern volatility until that happens. And we're going to want to see some type of breakout of, depending where these highs are, we're eventually could get an entry point somewhere down here. If you draw trend lines and tighten things up, you could try to squeeze in an early entry if other sectors are breaking out early. Like gold miners typically lead the way. If gold miners are breaking out, you might want to get into silver down on an early breakout somewhere in this area versus waiting something higher to get into it.
So it looks like, according to your analysis, we've got a range for silver potentially as low as just under $20 an ounce, potentially as high as $32 to $34 an ounce, and all of this within 3 months. So for silver investors,
Buckle up.
buckle up. We say in Quebec, attache ta tuque, because it's going to be a wild ride. It looks like for silver, which, I think a lot of people, we talk about that when we write about silver, that it's volatile, especially in markets like this, in the bull markets and the bear markets. But this is a real life example of what silver investors can look forward to. So you're going to need to be able to stick with the plan, and like you said, there are definitely going to be some buying opportunities, it looks like, for silver over the coming months as well, or the coming weeks.
And I would think most of your clients who are buying physical metals, I mean, they're probably not trading them so much. To know this analysis is just a comforting thought. It's because I hold physical metals that I do not plan to sell. I'll keep some probably forever. I will trim some off if we ever hit my lofty upside targets, but it's just nice to know that, hey, silver could, have quite a collapse here. But overall, it still looks really good longer term. It's in a bull market. I mean, it's just that comforting thought to know you're on the right side of a major trend. Mm-hmm. Short-term stuff like this doesn't really matter too much, but, we'll be looking for that 34, 32 area. And then we'll be looking at, the 51 area, and it's going to work its way up. Just like we drew on the charts with gold, we can use these stair-stepping patterns to watch each leg unfold, and it'll have a leg or three every year. You never know. But technical analysis gives you a nice idea of how to be mentally prepared for what's next.
Right. And before we jump over to platinum, because it is a metal and a metal group that people ask us about often, but before we go there, Chris, one of the questions I had for you, when we spoke back in August, you said that silver bull markets tend to be relatively short. In fact, they really do a lot of their the most of their movement will happen within like an 8 or 9 month period. Has that changed? Do you see this bull market being lengthier now for precious metals? Because you mentioned here $34 maybe kind of the high until the end of the year, and then beyond that we could be looking as high as 50 and testing the old record highs for silver. Do you have an idea at this point in time for either gold or silver how long or how lengthy this bull market might be?
Yeah, well, there's going to be a few big waves. And I just talked about this. I just did a talk about the precious metals super cycle that's really kind of just beginning. We're not fully in the super cycle, so it's going to be a roller coaster ride, I think, over the next 1 to 2 years still. Long term, I think we're going to see metals really pick up speed and be trading much, much higher, many multiples of where we are right now. But along that route, we're going to have some big rallies, and we're going to have some pretty gnarly, I think, sell-offs as well. So this year, based on what's going on, I feel like we could see a 2 to 3, 4, maybe a 5-month rally here to get up to these levels. I think there's going to be a grind to get up there. We got a lot of news. Stimulus isn't going to be the greatest for metals. It's hit or miss. Stimulus means people want to pile into the stock market, which means they want to get out of metals. They want to be more kind of risk on. But stimulus also means we're in a worse situation, and it's not good for currencies. So it's going to be a battle between metals and equities in general. But I think this year we're going to see the precious metals sector, especially gold miners, for those in the stock market, are going to perform exceptionally well for the next few months. But after that, we could get into a pretty gnarly area here where we could, for 6 or 8 months, maybe even a bit longer, see precious metals fizzle out. So this big run, say in silver and gold, to 34 in silver and 2,200 in gold, that might be the high for a year or longer. But I think things later are going to pick up, and metals are really going to start to take off. I mean, there's such a small percentage of people investing in metals. Everyone is 100% committed to the stock market. I mean, we're at the lowest levels we've seen, I think, for average holdings per precious metals in an investor account. And it's going to take years for that to come together. Like kind of like what we saw back in the 80s. Eventually everyone, like, I mean, all my parents and their parents' friends, they all have gold coins. I mean, everybody just started buying them like they were buying Bitcoin back in the day, when Bitcoin was at 20,000. So we're far from that. But it's going to take a long time for the masses to catch on and for everyone to start buying, you know, gold and silver bullion. So I think we're in this 5 to 8 year cycle, which is this part of the super cycle where in 5 to 8 years, I think we're going to see extreme high values. I think the bull market we're starting now is a much bigger bull market than kind of what we've seen in the past. It's going to go in waves. We're going to have these big waves of strength and then multi-month or potentially year-long pauses, but we're going to be stepping our way up. And just like any investment, it usually rallies for a short period of time, 5, 8, 10 months, and then we see it cool off. So it's hard to say how it's going to unfold. Obviously, predicting the future is pretty darn tough, but it's going to be a rough next year, I think, for metals until the end of next year. So this is going to be the next big run from here to the end of the year. I think is going to be the exciting time. And then after that, I think it'll cool off for a bit.
Perfect. Thank you, Chris. Let's jump over to platinum. It's an interesting metal because it for the longest time was the most valuable precious metal. It held a value superior to gold as long as I can remember. And in recent years, it's really struggled. Not only is it no longer the most valuable precious metal, actually it's fourth after rhodium, palladium, gold, and then you have platinum. It's a metal that's used primarily in catalytic converters, so it's tied heavily to industry and the demand for automobiles that feature catalytic converters and scooters and other vehicles that emit gases. Where is platinum? What is it doing? Does it even have a chance to get back to the position relative to gold that it used to have? That's the question that I get all the time from investors. Right. They see the price now and they're like, it's got to be a good buy, right? What are your thoughts? What are the charts telling you there, Chris?
Yeah, so I don't know a whole lot about platinum when it comes to the back end. I know it's used in catalytic converters. There was a big rally last year where China had a big boom in cars. And I mean, there was a big part of it actually being used for that. But I mean, obviously you look at this chart, it went from 2,300 all the way down to, 575. And really we're still bouncing bottom in this market. Now the last kind of, I don't know if it goes back this far. Oh yeah, we go way back here. Perfect. So the last super cycle in commodities where commodities were way undervalued, the most undervalued asset class was in 1999, 2000. And so here we are going through the super cycle, and really 2020 is kind of the next bottom in the super cycle, which is what I've been talking about. So I think there's a lot of potential upside in commodities in general. Going forward, but it's going to be a rough ride because bottoms are very choppy and tops are very choppy. You get huge movement. So it's going to be a pretty interesting time over the next 2 to 3 years as all this kind of the momentum fully shifts to the upside. I think this could be a wild ride, but overall, longer term, commodities should be in favor for 5 to 8 years. The first kind of half of that move, the beginning half. When we look at platinum on the shorter term chart, we have a very similar pattern as what we've seen in gold, silver, and even in the gold miners sector, where we've got a series of bull flags. You've got a rally, we've got a pullback, we've got a rally, a pullback, a rally, a pullback, another rally, and another big pullback. And these are all just series of waves that happen in the market. And in the grand scheme of things, we got this big move to the upside. Mm-hmm. Prices consolidating in this big bull flag channel. We're stuck under this major double top right here. And this is a really critical line in the sand. This is like the line in the sand that silver broke out on earlier this year. If it breaks and gets all the way up and breaks this level, we could see it really explode to the upside. So the pattern here is pointing to higher prices longer term, but it needs to get through this resistance level, this falling trend line. We need to see if the market's going to flush out first and continue lower before it goes back up. But overall, the platinum chart, this is going to be for an investor, somebody buying platinum and palladium. This is kind of like where the trend changes. This is where it's out of favor. And when it breaks into this, it's a new bull market. And that's where we should see explosive moves where you're in the money right away. Your little bars are skyrocketing in value, week after week after week and month after month. And then we look for the big stair-stepping patterns that we saw in gold. We'll eventually be looking for this market to, work its way up and then consolidate for a while, then work its way up and consolidate. And so, yeah, around that 1,000, 1,050, 1,045 level is the real line in the sand to get bullish and excited as a long-term investor for platinum.
Great. Excellent answer. Again, the important thing, you mentioned it a few times today, that underlying trend is there for precious metals. And we're not too far from that 1040 price point for platinum. So some encouraging news for people that have invested in platinum or considering it. I think that's some great analysis, Chris. If you don't mind, Chris, just closing the charts, I have one or two questions for you. And this next question might not be technical, but the nature of the question really is to know if it can be. We have US elections coming up in just a few weeks. It's such a polarized situation in the United States. A lot of precious metal investors witnessed the Trump elections in 2016. Everyone thought if Donald Trump got elected, precious metals were going to go through the roof. They said, this guy's volatile. The markets are going to be nuts. We got to get into safe haven investments. The opposite happened. Donald Trump got elected. Gold went absolutely quiet. The phones didn't ring for months. Now, with Biden being favored, Democrats being favored, it opens this whole debate again. And I know this might not be technical, but I'd love to hear your thoughts because I know you follow the markets closely. Will the US elections have a major impact on the markets in general? And if the Democrats are elected, do you expect that will have an impact on precious metals?
I can't really touch too much on that because I don't get into politics. I don't really dig too deep into it because it's just, to me, it's frustrating and aggravating to watch. So I don't really take part in that stuff. And you never know how people are going to react, whoever gets elected. I mean, if we see Trump get in, we're probably going to see like military stocks do really well. I mean, he seems to be always threatening and pushing other countries to the limits. He's very defensive. So I think I don't know what we're going to see in total, but no matter what, there's going to be a lot of stimulus. And I think the stimulus means we're probably going to see the stock markets move higher. I also think we're going to see fear in general continue to move into some physical assets.
Mm-hmm.
Gold broke out well over a year ago before everything else, and it's seen as a currency by the globe. So I think we're going to continue to see gold perform and hold up really well going forward. And eventually there's going to be, I think, a lot of traction to the metals, but I think that's going to be probably 12 months from now before we see this whole cycle and what's going on with COVID and the elections. And the next big stimulus plan or two are probably going to send stocks a lot higher. People thinking, okay, well, the Fed's just going to continue to dump money into the market. We're going to continue to drive prices higher. So that could put metals out of favor. So it's going to be a really rough ride depending on how big stimulus plans are, who gets elected. But again, just like you said, you never know how people are going to react. And that's why I don't really follow fundamentals too much. And I don't follow news because you never know. News is always surprise. And then you don't know how people are going to react to it. And it's the same with the elections. You really don't know what the market's going to do when push comes to shove and someone's elected. It's going to be a 50-50 bet if the markets go up or down immediately and how far, right?
Fair enough. So last question today, Chris. You mentioned a couple of other markets that have been performing well. You mentioned solar, you mentioned tech. I know tech's been doing well for quite a while. It's been a pretty impressive run, especially for some of the bigger brands. What other markets should people be watching right now? What other markets or segments, are setting up well that people should be paying attention to aside from their precious metals?
Right. It's a really mixed market right now. There isn't the one that looks the best out of them all are the gold miners. So if you were to look at a gold miners ETF, GDXJ, GDX, SGDM, which is the Sprott gold miners, I think all those are primed and ready for a huge move. They look just like the gold chart I showed you. And more or less, they show about a 60% upside move into the year end if it can break to the upside. Now it's in the same pattern as gold, so it has to break out first. We might still have this correction before that. But if it breaks out, it's going to be probably the leading sector going into year end. We're going to have a new president. We're going to have stimulus. People are still going to be super uncertain about what's going on. They were leading the way early this year. Tech kind of took over in other sectors, but they're starting to show signs that the tech in those are actually fizzling out right now. And gold miners have been taking a breather, but they're building a base. And so I think they're going to take the lead. Another sector that looks interesting is the utility sector. In the last month, it's outperformed most other sectors, and it's got a really tight little bull flag pattern that points to higher prices over the next 3 or 4 weeks. But other than that, really the gold miners are the clear sector. When you pull up and you go through every chart, that's the one sector that's got the biggest, cleanest looking pattern that actually fits the economic climate that we're in for the next big mover.
Well, thanks, Chris. You've delivered some more good news for precious metal investors, whether they be in the mining stocks, whether they be holding physical. Great analysis today. We'll leave your details alongside with this video. So if people want to follow your work, I know you're active on Twitter. I get your tweets every morning. So that's one of the first things I check. And obviously your web link will be in the video details as well. Thanks a lot for your time, Chris. Appreciate it. I look forward to seeing you again in a few months so you can update us.
Yeah, same here, Mark. Take care. Thank you.
All right. Thanks, Chris. Bye-bye.